Hi there, Mr. Holcomb here with another episode of The Math Behind the Modules.
Welcome to Lesson 28, Federal Income Tax. Okay, page 1 here is just tax tables. These are values that we're going to use to answer the questions and the exercises of this lesson. But before we start, I just need to say that the federal income tax is not calculated by summing up all that an individual earns and then taking a fixed percentage of that income. Instead, the federal tax system is progressive. That means the more income an individual makes, the greater the percentage of it is taxed. In this lesson, we will analyze our tax system, graph the federal income tax versus income, and use the graph to compute effective tax rates for families with different incomes. Okay, page 2 brings us to the exercise 1, and let's read this top part first. It says taxable income. The U.S. government considers the income of a family or individual to include the sum of any money earned from a husband's or wife's job and money made from their personal businesses or investments. The tax for a household, for example, an individual or family, are not computed from the income. Rather, they are computed from the household's taxable income. So for many families, the household's taxable income is simply the household's income minus exemption deductions and minus standard deductions. So they give us an example here of an equation. So they're saying the taxable income equals the income minus exemption deduction minus standard deduction. So if I go back to page 1, here's the exemption class. So you have to take into consideration if someone is single, married with 1 child, 2 or 3 children. And if they're going to file either single or married filing jointly. And then their taxable income is calculated by how much they make in this table. So we have to find values between these two numbers, and then then here's the 10% tax, 15, 20, and so forth, all the way down to 39.6%. Okay, so all of the problems we will model in this lesson will use the equation to find the family's taxable income. The only exemption is if the family's taxable income is less than 0, in which case we will say that the family taxable income is just 0. So use the formula and the table above to answer the following questions about taxable income. So exercise 1 says, find the taxable income of a single person with no kids. Okay, so let's stop right there. Single, no kids. Filing status will be single. And their exemption class is single, and their filing status is single. Okay. Going back now. They have an income of $5,000 or $55,000. Okay, so their taxable income is going to equal income, which is $55,000, minus exemption deduction. So I go back to this page here. The exemption class is single, and the exemption deduction is $3,900. So it's minus $3,900 minus the standard deduction. And the standard deduction is $6,100. Filing status is your standard. Standard deductions, right here it says it. Standard deductions based upon filing status. Exemption deductions for tax year 2013. So I'm going to subtract $6,100. Not $61,000. $6,100. And that's going to equal, well, 3,000 plus 6,000 is 9,000. 900 plus 100 is 1,000. 9,000 plus 1,000 is 10,000. So it's $55,000 minus 10,000. So the taxable income is going to be $45,000. Okay, exercise 2 says, find the taxable income of a married couple. Come on, man, change it to green. A married couple with 2 children who have a combined income of 55 grand. So we're looking for married, 2 children. So I go back, and now we're married with 2 children, which is 15,600. Okay, and we're going to be married, filing jointly. So we're going to use 15,600 and 12,200, and they're making 55,000. So we're going to take that $55,000, and we're going to subtract the exemption deduction, 15,600 minus the standard deduction, 12,200. Okay, so I'm just gonna rewrite this. It's 55,000 minus, and 15 and 12 is 27, and then 6 plus 2 is 8. So it's $27,800. So 55,000 minus 27,800 would be 0 minus 0, 0 minus 0, and then I need to borrow from the 5 and 4 and put a 10. 10 minus 8 is 2. So now this 14, 7, and this is a 4 minus 2 is 2. So $27,200 is going to be the taxable income. Okay, so exercise 3 says to find the taxable income of a married couple. Okay, so I'm going to go back. They're married. So we're going to, filing status is going to be married filing jointly, so we're going to use this 12,200. And 1 child, combined income of $23,000. So we have $23,000 minus, and 1 child. So married with 1 child is 11,700. So we're going to subtract 11,700 and 12,200 from 23,000. So 11,700 and 12,200. 11,700 minus 12,200 equals 23,000 minus, I'm just combining the 2 deductions here, and 700 plus 200 is 900, and 11 plus 12 is 23. So if I take $23,000 minus 23,900, that equals negative $900. But remember what it said up here. If the family's taxable income is less than 0, which in this case we will just say the family's taxable income is just $0. So this family has a taxable income of $0. Okay, if they make $23,000 combined and have 1 child, then they are not going to be taxed. Okay, page 3, federal income tax and the marginal tax rate. Below is an example of how to compute the federal income tax of a household using the federal income tax table above. So that's page 1 of this module. So example 1 says, compute the federal income tax for the situation described in exercise 1, a single person with no kids making 55 grand. Okay. So we're going back to our problem number 1, which was right here. So their taxable income is $45,000. Okay, so from the answer in exercise 1, the taxable income is $45,000. Looking up $45,000 in the tax table above, we see that $45,000 corresponds to the second row because it's between $17,850 and $72,500. So they're taking this $45,000, they're going back to the first page, they're going down to the bottom here, and 45,000 is more than 17,850. So taxable income's over this, but not over this. So in other words, between 17,850 and 72,500, and that's where our $44,000 is. Okay, 45,000. Still, $45,000 is in between here. So the tax is 17,850 plus a marginal rate of 15% of the amount over. Okay, so let's take a look. So it says to calculate the tax, add $1,785 plus 15% of the amount of $45,000 that is over 17,850. Since 45,000 minus 17,850, so let's take a look at that. So again, let me get this out of the way. Let me rewrite it more neatly. $45,000 is between these two values. So what they're saying is the tax is $1,785 plus the marginal rate of 15% of any amount over this $17,850. So we have to take 45,000 and subtract 17,850 from it, and that amount gets multiplied by 15%. So they've done that for us in this exercise. So they added 1,785 plus 15% of the amount of 45 that is over the $17,850.5, since 45,000 minus 17,850 equals 27,150. So let me explain that. They took the taxable income, and then they want to know how much was over 17,850. So 45,000 minus 17,850 is the taxable income. So that is 27,150. So you take 15% of that amount over 17,850. So 15% of 27,150 is 4,072.50. The total federal income tax on $45,000 of taxable income is $5,857.50. So they took $4,072.50 and added $1,785 to it. And that came from this amount here and 15% of the amount over this. Okay, so they did that one for us. So exercise 4 now says compute the federal income tax for a married couple with 2 children making $127,800. So they're married, 2 children, making $127,800. So the first thing I need to do is to compute how much taxable income they have. So their income is $127,800. So the first thing we have to do is what we did in page 1, and that is income minus exemption deduction minus standard deduction. So the exemption deduction, so we're looking for a married couple with 2 children. So if I go back, that is going to be this and this. So we're going to subtract 15,600 and 12,200. So that's the first thing we do. So let's just use the calculator here to save some time. 127,800 minus 15,600 minus 12,200, and that is going to equal $100,000. So their taxable income is $100,000. Okay, so taxable income is $100,000. So now we have to go back to the table on page 1, down to the bottom. Let me erase this. So now our taxable income is $100,000, and 100,000 is right here. between 72 and 146. Of the amount over 72.5 is what's going to get 25% added to it. So 100,000 minus 72,500 is 00572, $27,500. And then we're going to take 25% of that plus 9,982.50. Okay, so I'm going to just take a screenshot of this for you and bring it over to the next page. Okay, so here it is, just to make it easier for us. All right, so go back to my pen, and now it is going to be what we've done here. So we add 9,982.50 to and 25% of the amount over, which is 27,500. The amount over 72,500. So we're going to add 9,982.50 plus 25% of the amount over. So we take 25% of 27,500. So let's do that. 27,500. You could just divide it by 4. 25% divided by 4. And that is $6,875. Okay, so this is times 0.25. 25% will give me this. So there's one amount. The other amount is 9,982.50. Okay, so we're going to take 9,982.50 and add 6,875 to it. And that is going to give us 0, 5, 7, 15, 9 and 8 is 17, 18, carry the 1, 9 and 6 is 15, plus 1 is 16. So we're going to be paying $16,857.50. Okay, obviously that's without deductions. So that's how we compute how someone pays taxes. Okay, so down below this just says, taxpayers sometimes misunderstand the marginal tax to mean, if my taxable income is $100,000 and my marginal tax rate is 25%, my federal income taxes are $25,000. This statement is not true. They would not owe $25,000 to the federal government. Instead, a marginal income tax charges a progressively higher tax rate for successively greater levels of income. Therefore, they would really owe 10% of the first $17,850 or $1,785 in taxes for the interval from 0 to $17,850, 15% on the next $54,650 or $8,197.50 in taxes for the interval from $17,850 to $72,500, 25% on the last $27,500 or $6,875 in taxes in the interval from $72,500 to $100,000, for a total of $16,857.50 of the $100,000 of taxable income. So the table already calculates this for us, so we don't have to do those three calculations combined. They give us the tax amount plus the marginal rate. So the tax table above incorporates the different intervals so that only one calculation needs to be made. The answer to this problem is the same as the answer in exercise 5. That's a misprint to exercise 4. Okay, page 4 brings us to exercise 5, and it says to create a table and a graph of federal income tax versus income for a married couple with 2 children between $0 of income and $500,000 of income. So married couple, 2 children, between 0 and 500 grand. So I set this table up already. So we need to know their income, their taxable income, and their federal income tax. So the first step in creating the graph is to determine the equation for taxable income. A married couple with 2 children has a standard deduction of, so we go back, married with 2 children, standard deduction of $12,200. So standard deduction, I'm going to write that here. Standard deduction, $12,200. And an exemption deduction, so now we need to know what the exemption. So we want an exemption deduction. And I go back, and that is a married couple with 2 children. Exemption deduction, married to, is $15,600. Okay, so I'm just taking little notes here. Standard deduction $12,200 and exemption deduction $15,600. For a total deduction of, well, if I add these, 600 and 200 is 800, and 12 plus 15 is 27. So the total deduction is 27,800. So if we let the real number, taxable income we'll call it, let me change to green. So let's just say taxable income equals income minus $27,800. If income is greater than or equal to $27,800. Okay, so there's one equation. So if we make our income is more than $27,800, it won't be 0, right? So if our income is $20,000 and I take $20,000 minus $27,800, I'll be at negative $7,800. So then my taxable income would be 0. So I'm just talking about making more than $27,800. So if my income is greater than my deduction, then I will pay taxes. If my taxable income is, so this is going to be a conditional statement, so we're going to have a piecewise function, if you will. We could also have 0. So if my income is less than $27,800 and I subtract $27,800 from it, I get negative values, and it was told us before that that's just 0. So my taxable income will be $0 if my income is greater than 0. Okay, if I have an income, or less than or equal to $27,800. So there's my 2 scenarios. If my income is greater than $27,800, then it's income minus that $27,800. If my income's between 0 and $27,800, then my taxable income is 0. Okay, so we have a lot of stuff going on here. I have given you some values here. We'll use these. So the income is going to be $0, $27,800, all the way up to $500,000. We're going to calculate their taxable income. Okay, so for the first one, their income is 0, so their taxable income is going to be $0. Okay, fix the font there, so the taxable income is going to be $0. 27,800 minus 27,800 is 0 as well, so this is going to be 0. And now what we need to do here is just subtract 27,800 from this income. So I've done this in a spreadsheet. I'll just bring this up here. So I did income, taxable income, federal income, and here's the first two, $0. And then this, if you aren't familiar with spreadsheets, they really make things easier when you're calculating a lot of things. All I need to do is subtract 27,800 from these values here. So I just go into this cell here and hit equals. Click on this cell. So it's going to be A4 minus 27,800. And if I hit enter, it'll tell me that amount. And then I can simply click and drag this down, and the calculation will take the next one and the next one and the next one. So there are my values that I'm going to put into my table here. Okay, so I put them side by side so they won't keep disappearing on me. So now I just want to type in these values over here into my table. So that's going to be 17,850, and then 72,500. Let me put commas in there too. Okay, 146,400. 223,050. 398,350. 450,000 and 472,200. Okay, so there's our taxable income in our table, and now we have to calculate the federal income tax. Well, federal income tax for the first two is going to be 0. And then we need to use this table down here. So 0 to 17,850 is 10%. So 10% of 17,850. So now I could just use this table over here and say equals this times 0.1, right? 10% is 0.1. And it's $17,850. Okay. Okay, so the next one is 72.5. Let me enter this here. All right, so now we're at 72,500. 72,500 is 9,982.50, and that was 25%. So let's see if this works. So this is going to be equal this times 0.25, and it's 18. No, that's not right. So let's see. Where was I? Oh, their taxable income is 100,000. Or their income is 100,300. Taxable income is 72,500. If taxable income is over 72,500, so what did I put here? B5 times 25%. That's not right. So I'm just trying to calculate this 25% of what? Is it A5? No. Okay, let's just use the table here. So this is taxable income 72,500. Taxable income's over 72,500. 9,982.50. That's what goes here. 9,982.50. This taxable income is 146,400. So that is going to be 28,457.50. Okay. Taxable income of 223,050, so that's right here. And that will be 49,919.50. And 426,150 taxable income of 398,350, which is right here. 107,768.50. So 107, comma 768.50. And finally, 450,000 is 125 comma, 846.00. Now we're at $500,000. Taxable income is 472.20, or 472,200. Okay, so since this table says 450,000 and more plus, then we will just put that amount in here as well. 125, comma, 846.00. Okay, so there's our table. So now it says, let me get this out of here. Interpret, so if I move this table here, this is now exercise 6. It's just covering it up. Exercise 6 says, interpret and validate the graph you created in exercise 5. So we need to do a graph as well. Okay, so create a table and a graph. Okay, so I'm just going to bring in the graph because it's really hard to graph these large numbers. So let me get this out of the way here and I'll drop a graph in. Okay, so here's what your graph should look like. Obviously, you're going to have an x-axis, y-axis labeled income, dollars, and these 200 and 400 are in thousands. And then up the side, the y-axis is going to be federal income tax dollars in thousands. So 0, 0, 0, 0, and then we graphed income. So that's this column here. So this is these are my x's. These are my x's. And federal income tax dollars, this is my y. So if I made $45,600, this is $200,000, $50,000, $45,000 is back here. Then it is 1,785. So this one's close to 200,000, which would be the 174.2, and that is 28,000. So here's 20, here's 30, so it's right about there. And as you can see, the graph is going up at this rate. So it says interpret and validate the graph you created in exercise 5. Does your graph provide an approximate value for the federal income tax you calculated in exercise 4? So if we go back to exercise 4, what did we have? We had a couple who made $127,800 and their tax was $16,857. So $127,16. So if I went out to 127,000, okay, 200,000 is here, 100 is here, 127 is about here, and I'd be graphed right about there, and it was 16,000, so it's under 20, so I would say yes, that's about right. Okay. Okay, exercise 7 says, use the table you created in exercise 5, so that's right here, to report the effective federal income tax rate for a married couple with 2 children who make $27,800. So $27,800 and federal income tax. So we're looking at let's see which column. So what we're doing here is we're taking this amount, we're finding it on the table, federal income tax amount, and then we're going to divide the federal income tax amount by the income to get our rate, our percentage. So it would be 0. This one would be 0 divided by 27,800, and that would equal 0%. They would not pay any taxes. Part B is 45,650, which is right here. So I take 1,785 and divide it by 45,650. And if I do that in my calculator, it's 1785 divided by 45,650. And that equals 0.039, or that's approximately 4% when I round. So I'll just say 4%. And it's an approximation, so how about I do this squiggly equals, right? And then $500,000 is right here. So I'm going to take $125,846 and divide it by 500,000. Okay, that one you can approximate as well. And that is going to be calculated by, well, if this is 500,000 and you double it and you got a million and you have 10. So you can just double this and move the decimal. So it would be 25%, it looks like. So 125,846 divided by 500,000. And it comes out to be 25%. Okay, page 5 brings us to the end of lesson 28. Go to your problem set.